My name is Alexis Teitlebaum, and this is my demonstration speech. My topic was how to understand and decipher the stock market. So I will go through the process on how to do that. So first, you must understand what the stock market is. So the stock market is where investors can buy and sell securities or stakes in individual companies, as well as exchange-traded funds, which are known as ETFs. Anyone can take part in the stock market and invest in any stock that you want, whether it's from Apple, Tesla, Netflix, Snapchat, or whatever it is that you're interested in. You can invest in it. It's just important that you make sure you know that the stock has a good value and that it does good throughout the system. The stock market has its own set of rules based upon government regulations. The New York Stock Exchange, which is known as NYSE and NASDAQ, are two of the world's biggest stock exchanges, which are places and systems where stocks are traded. In the stock market, you are to follow the performance of the overall market by using indexes, which are ways of measuring a weighted average value of a collection of securities. And a securities market index indicates the performance on the stock market. Secondly, you must understand how the stock market works. The best way to think of a stock market is to really just look at it as a safe and regulated auction house where buyers and sellers can negotiate prices and trade investments. And honestly, if you really think about it, you can just look at it as gambling in a way. Today's securities are more commonly traded through a collection of trading platforms, and almost all transactions are done digitally and not in person due to all of the technological advances in the world today and how we do everything online instead of face-to-face now, like they were back in the day before everything was developed and stuff. Even though many stocks are listed on the exchange, public listing itself is not a requirement for stock sales. Thirdly, it is important that you know about the major stock exchanges. Whenever someone says the word stock exchanges, they're talking about actual markets where company shares are traded. As I stated earlier, the NYSE, which is the New York Stock Exchange, and NASDAQ are two of the biggest markets in terms of market capitalization, which in other terms means the value of a publicly traded company. And this is calculated by multiplying the total number of shares by its most current share price, because the share prices change all the time. The top 5 stock markets in the world are the New York Stock Exchange, NASDAQ, Tokyo Stock Exchange, Shanghai Stock Exchange, and Hong Kong Stock Exchange. Fourthly, you must know and understand how the economy affects the stock market, because that is really how, what runs the stock market, the economy, especially how it's always changing every single day. There are many factors that affect how the stock market is doing, whether it's moving up or down due to political climate, social factors, interest rates, trends, and shifts in what investors prefer. If the general population feels as if the economy will soon be taking a turn for the worse, they tend to sell stocks because bonds and treasuries offer a safer return. So for example, say something goes wrong in the production of a new iPhone and you own a stock in Apple. The value of that stock will not be high anymore. It will lose value in the price, so it will go down. So people who are invested in that stock will tend to sell it so that they don't lose money, because you can end up losing more money from that than you paid for the stock in the first place. And on the other end, if people are feeling confident and strongly about the economy, they tend to buy stocks, which is a big risk to take in the stock market, but a lot of people do that. So for example, because of COVID-19 and how it caused a lot of stores and companies to have to close down for the time being, people are stuck at home doing nothing, so they'll resort to staying inside, doing stuff inside, which is Netflix. So the price in that stock of Netflix will tend to move up, and people will want to buy that more because it's getting higher in price, and they'll make a lot of money off of it. Fifthly, you must know what stocks are in the first place. So to explain in the easiest way possible, a stock is a share of ownership in a company or corporation. There are 2 types of stock, which are private stock and public stock. Public stocks are a public corporation that issues stock that the general public can buy and trade on stock market changes. These public stocks are owned by shareholders who are part of the general public. Private stocks are not open to the general public, and these shares are limited in number as well. These stocks are usually held by a small number of people and not traded publicly or on any exchange market. Next, you should know what market participants are. The market participants who buy and sell stocks are dependent on which stock market you are referring to. There are 3 different types of market on which companies, investors, and brokers can buy and sell shares. The first market is the primary market, which is where companies directly sell shares of stock to investors only. The second market is the secondary market, which is where it is just between the investors and doesn't have anything to do with any company or corporation. The third and last market is the over-the-counter market, which is a market that people resort to if companies can't or are unwilling to meet certain standards. So when you buy and sell over-the-counter stocks, there is no public price, and each transaction is completed between individuals. Next, one of the most important concepts is being able to understand how to read stocks, because without that, you can't be in the stock market, you can't be involved with it. So each company has a trading symbol, which is almost always abbreviated. For example, for Apple Incorporation, it is shown as AAPL. And the first number you will notice on any financial news outlet with a stock tracker will be the current price of a share. If you are to look at a stock table, it usually includes the year to date, which is expressed as a percentage and shows how the price of a stock has changed since the beginning of the year. You will also find the dividend amount, and a stock table or stock quote can also include the prices of the last trade of the day and the net change. Lastly, you need to know about the different types of stock charts and how to read their patterns. So the different types of stock charts are head and shoulder, daily bar charts, line chart, candlestick chart, and point and figure chart. In order to read stock market charts patterns, you first need to identify the chart. Then you need to choose a time window. Then note the summary key, track the prices, note the volume traded, and lastly, look at the moving averages because they're moving constantly. So that is really it, and that's all you need to know to be able to understand and decipher the stock market. And if you want to get involved in the stock market, this is a good way to start by understanding all of these things.